To get unemployment down, we really need GDP growth of at least 0.9% and preferably 1% per quarter. Now, a year ago, it did hit 1% for the quarter and it looked like the economy was on the way back, but it was not to be. Today, the Bureau of Statistics reported that growth for the December quarter was 0.5%, and for the year, 2.5%, and apparently heading lower. In fact, you can see a clear gradual downtrend over a decade with two brief spikes above 4% growth in 2007 and 2012. And if we overlay GDP growth rates for the world and our trading partners, you can see that Australia is falling behind. World GDP growth is holding at 3.5%, and our trading partners, which obviously includes China, are growing at 4%. Why is our economy doing so poorly? Well, there are a few reasons, but this is the main one. The mining boom has finished, and mining investment as a percentage of GDP is in the process of falling back from a high of 6% of GDP to its long-term level of 1 to 2% of GDP. The problem is that non-mining investment is not picking up the slack. It's falling too, and you'd have to say the main reasons for that are the tight federal budget and relatively tight monetary policy, which left the dollar too high for too long. And the RBA says it's still too high. Today it fell a bit, but it's still above 78 US cents. And the share market also fell a bit after a small drop on Wall Street last night, thanks to selling of retailers such as Myer and Woolworths and the big miners, which all eased back because of falls among the metals on commodity markets last night. The only commodity to go up, in fact, was oil. And that's finance.